Hey everyone, it's Brian here, and I actually recorded a live trade and I decided to redo the video and give you a lesson on support and resistance. So I'm sure a lot of you look at lower time frame charts kind of like this. Here's what I want you to do. Get out of your low time frame chart, go to a weekly time frame. This is exactly what I do. Go out to a weekly, you can see we're looking all the way back to early 2005. And right now I'm looking for some bar lows. My trade was right in this area, so instead of marking every area, I'm going to mark more of the ones that pertain to my trade. So I've got some bar lows right here. We've got about 3 right in this area, and that's what we're going to call our support. You can see it came down, touched it, never broke through it. Right here it did, but on these it's acting as support. So now I'm going to get a little bit closer to my trade, and we can see we've got same deal, punch through this area, and then we've got some bar lows right here, and then we've got a bar high, and they're all kind of in the same area. That's why I like to call, instead of support and resistance, just price pivot zones. And that's sort of a term I've picked up from the method I've learned to trade. And as we can see, price doesn't necessarily stop on one certain pip. It's an actual zone that it's in. So you could consider all of these highs through here kind of a zone, and these lows right through here kind of a zone as well. But for time's sake and all, in this charting software, I'm just placing a line in areas that look relevant. So right through here we've got high, this line is resistance with this high, these lows it's acting as support. Same thing over here, the highs of these bars, it's acting as resistance. Right through here, these highs, we've got resistance on these bars, and these lows where it's acting as support. So that was on the weekly time frame. You can go into the daily if you want. You can find more defined levels on the daily. The lower time frame you go, the more you can define the areas. So right through here we've got more pivot zones, support and resistance. We've got all these bar highs, all these bar highs, resistance, and then we've got these lows as support. And my trade was actually in here. I placed it on the 4 hour. So now I've zoomed in a little bit closer, and I'm going to show you the trade. So what initially caught my eye was this bar right here, and it's somewhat of a pin bar setup, but it's not a very good pin bar because it's not in a prime location. I was expecting a turn in the market when I saw the pin bar, but instead of playing it as a pin bar, I wanted to play it as a breakout trade. So again, I'm defining support and resistance levels on the 4 hour time frame. This line was actually from the weekly time frame that I placed, and look how relevant it is right through here. And that was drawn on the weekly. So that goes to show you that you can zoom out and draw you some lines in, and then zoom into your smaller time frames, and they're going to be relevant still, even though it's not as fun to trade the larger time frames. Anyways, right now, this was the trade. This candle right here, this bar right here, actually is what put me in the trade. So I thought I saw a turn at where the market was going to turn, and this is kind of how I picked it out. We've got price going up, and we've got the MACD going down. So we've got divergence in the market, and that's what I look for. So price going up, MACD going down. They're going in opposite directions, so that's what we like to call divergence. And I saw some highs right through this area, and then I saw lows right through this area. So I said, hey, okay, if it breaks below it, then I'm expecting it's going to keep going, that the market's going to go lower for the time being. And that's why it was a breakout trade. So price broke below the candle. I believe I put my entry 10 pips below and a stop loss 10 pips above this candle. So I entered the trade, and then I did a trailing stop on it. And how I trailed it was every third candle I'm going to move this out of the way. You can tell where I entered the market already. And I'm going to show you how I trailed my stop, how I managed this trade. After this bar closed out right here, I wanted to do kind of a 3-bar trail and stop. So after this one closed out, I looked and I said, okay, this one closed, next one started. I'm going to drop on down. I didn't want to get too aggressive here. So the highest of these 3 bars was this one, and I placed my stop about 10 pips above it. So I moved my stop on down 10 pips above this. After this next bar closed out, the highest bar was still this one. At this point, I wasn't really sure what the market was going to do, so I left it 10 pips above this bar. And this next one closed out. I brought it on down. The highest of these 3 bars was this one. So 94, we're at 204. So right in this area. I actually have my stop loss right at about 201 pips. I figured if it went above that, and you can see we've got support and resistance right at this line as well. So I figured if price went above that, my trade would be invalidated. I actually set some alarms to go off if price was playing around right in this midpoint area. I actually set some alarms and they never went off if price went lower or higher, and got stopped out of the trade. So I risked 1% of my account on this trade, and I banked right at 1%. So 1-to-1 risk reward. Had my alarms gone off, I might have probably closed out